Rates slammed in with a vengeance, Gabriela. 2 days ago, 3 days ago, there's a new acceleration to it. Is it a brutal move that could upset markets?
No, not at this point in time. We're rising from very, very low levels of rates, and we're rising for the right reason, which is that economic growth is improving, inflation has turned around, and central banks justifiably are removing some of that emergency medicine, some of that stimulus.
In the ancient history of the CFA curricula, there's the idea that yield actually competes with stock dividends. Anybody under a certain vintage has forgotten that maxim. Are we anywhere near where yield competes with dividend?
No, we wouldn't say so. And if we go back all the way to the 80s and the 90s, there have been moments in time when yields have been higher than dividends, and that hasn't necessarily upset the apple cart. What we would say is don't chase stocks that have dividends and that's it. So your very defensive-like sectors like utility, staples, telecom, REITs, look for yield, but also companies that are growing their earnings, growing their bottom line. So it's a combination of both, right?
Good morning, Gabriela from London. What's your take on technology stocks? So we're seeing quite a lot of valuation, upswing. I don't know whether it becomes frothy or it still has some way to go.
No, we think there is a way to go. And if you look at earnings, for example, we've had the kickoff of earnings season. This is going to be quite a busy week. And if you look at which sectors are seeing the highest top line growth and the highest earnings growth overall, it is the technology sector. And we think that is going to continue in 2018 as well. So you have that secular trend of technology being everywhere in our lives. And also the added boost of a weaker dollar and better global growth for technology, which is a very internationally exposed sector. So it all lines up for fundamentals to still be there for the tech sector.